Alright, good day everybody. It's Judd. It's Monday afternoon. Just go over a few things here. Volatility's up. It's trader's delight. So my favorite chart is this 150 by 3 in the S&Ps. Last night, I put out a piece, whatever the low was, if it rallied 150 points, they could try it higher. So there's 1, 2, 3, 4, 5, 6, 7, 8, 950 plus point reversals today. That's today. And that's probably the most I've seen in decades, if not forever. And I've been doing it a long time. This morning we were just looking at the U.S. session chart only. A couple of things I missed this morning during trade, as part of the bottoming process. I've been looking at this quarterly chart in NVIDIA and talking about NVIDIA coming down for 2 months. That it needed to come down into the 80s. And it got, re-challenged that momentum line, and that was the stone cold low of the day. The other good low is Berkshire, actually, that went right down to its, let me find that. Let me just pull that over. Which, this is basically the same pattern as the S&P, but the low was really pronounced because it went right down to its 200-day moving average and then came back up. So that was just something that if you're prepared and you have orders resting, you can take advantage of a day like today if you know that that's what you want to own. Silver, gold I'm done with. I got out of the last 20% of my gold that I bought a couple $100 lower right in the opening this morning. So that's not going to hold up. It can break another $60, $70. Let me get to my little thing here. Okay. So gold can get out another $60 or $70. You can see Berkshire came right down to the 200-day moving average, and this whole game was off. Again, the U.S. settlement. There we go. Wrong month. Okay. So this morning we gapped down into here. It opened up. We broke first. And then we came up and filled the first gap, which is 50.88.5. That was your first 200-point rally. When you look at it on a monthly basis, hold on. Got to go to an active chart, as we're looking at the wrong data. It's trying to come back. Came right back to these January 22 highs, where we broke down from. This is what I've been looking for a long time. Now, I'm not so convinced that this is going to be the stone cold low. And a couple of reasons is that the bonds act like they want to go lower, but everybody wants the yield. The futures want to go lower, and the yield, everybody's looking at the yield and wanting the yield to go lower. So you can't have the stocks and bonds typically go in opposite directions, and that's what you saw today. The only thing that gives me reason to believe that we can try to trade higher up into Wednesday is right here in this pit S&P bond spread. You see this this is a 4-day island 2 weeks ago on a Wednesday high, gap lower, came back up on a Wednesday high to the 200 average, and this is the election, these red lines. It held the election low, or the election high, gapped it, came back up to the election low, failed. Now this can certainly come back up in here as 1, 2, 3 gaps down, just like the pit S&Ps. Those are exhaustion gaps. So you're looking to get an edge on an extreme and buy them before you sell them. That's it. To see if they can come up for a gap fill. So this is going to take a couple of days to play out. Oil has really put in a good low, and you know, we can stop in here. Or it can, you know, we can go up to as high as 69.75 and be no good. So all I'm saying is that this is a huge dating game, and volatility is, you know, we've never seen this type of price movement. You know, that was the last 3 days was the longest one-way movement in the S&Ps, period. You know, they'd gone up in huge moves, but it took weeks. All this price action was in, you know, 24 hours. So this is a trading game, and if you're not trading for 40, 50 points in the S&Ps, don't do it. This is what happens when they raise margins, and you know, the liquidity goes way down, and that's what you're seeing. You know, oh God, I don't want that. You know, the VIX has been all over the place today. When you look at it on a quarterly, you know, this is what we were looking at yesterday at 48. It went shy of it. Today we spiked it again. This is a flat cloud, which tends to mean that the gravity takes it back to that flat line. And pretty much everybody sold volatility this morning, and they bought stocks. And then you're trading the headlines, which may or may not be true. So, you know, that's all I've got for you. You've got to take this thing one day at a time. You know, if you want to listen to all the fundamental guys tell you where it's supposed to be, what it's supposed to be doing, it's going to be, you're going to have a hard time. I don't believe that the downside's over with, because if their goal is to get the 10-year yields lower,